We have agreed to have the additional 25% rate imposed since April this year on motor vehicles and automotive parts, bringing the total, including the existing rate, to 15%. We are the first country in the world to achieve such a reduction in tariffs on motor vehicles and automotive parts without any limits on quantity. We were able to keep Japan's tariff rate to 15% when it was intended to be raised to 25%. That is the lowest figure to date for a country that has a trade surplus with the United States. President Trump and I will work together to implement the new agreement and to further advance Japan-US relations not only economically but in all areas, and to work towards the realization of a free and open Indo-Pacific.
The trade agreement between the US and Japan, recently signed, marks a significant step forward in bilateral economic relations, with commitments to reduce tariffs on automobiles and expand rice imports. However, behind the massive investment figures and trade commitments, the question arises: which side will truly benefit from this deal? In the next 15 minutes, join Economy Roast for an in-depth analysis to uncover what's really happening.
Washington will reduce import tariffs on automobiles and refrain from imposing new tariffs on goods from Tokyo. In return, Japan has committed to a $550 billion investment and credit package in the U.S. market. In 2024, bilateral trade between the U.S. and Japan reached nearly $230 billion, with Japan maintaining a trade surplus of approximately $70 billion. According to the U.S. Census Bureau, Japan is currently the fifth largest trading partner for goods with the U.S. Additionally, the U.S. is Japan's largest export market. The content of the agreement is as follows. The tariff on Japanese automobiles, a product accounting for over 25% of Tokyo's total export value to the U.S., will be reduced from 27.5% to 15%. Tariffs on other Japanese goods, scheduled to take effect from August 1st, will also be adjusted from 25% to 15%. Japan, in turn, will maintain current tariff levels on U.S. agricultural products but has agreed to increase the volume of rice imports within a duty-free quota. Steel and aluminum, currently subject to a separate 50% tariff, are not included in the agreement's framework. The agreement also does not address defense spending, a topic former President Trump frequently raised. The $550 billion investment package is part of the Japan Investment in America initiative, aimed at boosting capital flows into key sectors related to economic security, such as semiconductors, pharmaceuticals, steel, shipbuilding, strategic minerals, energy, automobiles, and AI technology. Deputy Governor of the Bank of Japan, Shinichi Uchida, called the agreement a very significant step forward and stated that it reduces uncertainty regarding the economic outlook. However, Norihiro Yamaguchi, a leading Japan economist at Oxford Economics, said he is not optimistic about Japan's economic growth.
I think it's something in between, actually. I know it's not the exciting answer, but in the financial market, I think the general reaction is quite positive. People are very welcoming the result, but the effective U.S. tariff rate on Japanese products will stand at around 70% according to our calculation, which is significantly higher than previous level. So I'm not that optimistic about the growth prospects in Japan. Actually, I don't think that the Japan's import of U.S. cars will increase significantly from this. The tariff rate on automobiles in Japan is zero and has been zero for like 3 decades. And if we take a look at the U.S. share in Japan's imported car market, it has been stuck at around 10%, whereas the import from Asia, especially China, is significantly increasing with the EVs. And the European cars have a much larger share in Japan's imported car market. So there must be some structural thing which prohibits US cars to sell well in Japan. Either it's a body size or a fuel efficiency, but in the world, I don't expect the US cars to increase shares in Japan. Rice, it's very tricky because yes, the US rice, the Japan's import of the US rice will increase, but overall allowance for the tariff-free rice import will be maintained. So yes, the import from the US will increase, but the import from Asia or Australia will diminish, and the overall rice imports will be basically unchanged. So that means that the impact from the increasing US import rice will not that significant. And at the same time, the Californian rice sold in Japan is not that cheap. That means that even if the import from the US increases, the domestic rice price is not likely to decline significantly. By my personal preference, I think I will stick to the Japanese rice, especially for sushi. It's more sticky than the imported rice anyways. But we have to make a decision. The domestic rice is very expensive. It's like twice as expensive as it was in 2024. And households are suffering from these high food prices. So to keep I would say like culture of eating rice often, I think it's very essential, quite essential to import rice from abroad. So with this 50% tariff, I think it could have a devastating impact on steel industry itself. But steel is not auto for Japanese economy. Steel consists just 1 or 2% of the total export to the States, whereas auto consists around the 30%. So overall impact of that will be much smaller than the auto tariffs.
Following the announcement of the agreement, the Tokyo stock market surged, reaching its highest level in a year. The Nikkei index rose nearly 4%, with Toyota shares climbing over 14%, Honda up nearly 11%, and Mazda Motors soaring 17%. Analysts noted that the trade agreement has mitigated significant risks to Japan's fragile economy, providing the Bank of Japan with more room to raise interest rates to combat inflation. Despite tariff barriers, the U.S. remains a critical market for the Japanese automotive industry. For Toyota and Hyundai, North America accounts for at least 40% of their revenue, with the U.S. being Toyota's largest consumer market. The excitement in the Japanese market also spilled over to automotive stocks in South Korea and Europe, as investors anticipate that these countries may secure similar trade agreements with the U.S. in the near future. Both nations view the automotive sector as a strategic export industry, generating millions of jobs and serving as a source of national pride. U.S. automakers, however, expressed dissatisfaction, arguing that the agreement is unfair since imports from Japan benefit from reduced tariffs, while vehicles manufactured in Canada and Mexico remain subject to a 25% tariff. Wall Street opened higher on July 23, 2025, after U.S. President Donald Trump secured a trade agreement with Japan, bolstering expectations for further deals ahead of the approaching August 1st deadline. The Dow Jones Industrial Average rose 158.7 points, or 0.36% at the open, reaching 44,661.12. The S&P 500 gained 17.3 points, or 0.27%, to 6,326.9, while the Nasdaq Composite increased 73.8 points, or 0.35%, to 20,966.467. So far, the S&P 500 has risen approximately 8% in 2025. Shares of GE Vernova soared to an all-time high after the power equipment manufacturer raised its revenue and free cash flow forecasts, while surpassing Wall Street's second quarter profit estimates. GE Vernova has grown over 80% year-to-date in 2025, with electricity consumption expected to reach record highs due to rising demand from AI data centers and cryptocurrency operations. Major AI chipmaker NVIDIA saw gains, contributing to the upward momentum of the S&P 500 and Nasdaq. Tesla fluctuated between losses and gains ahead of its quarterly report, set to be released after the closing bell. Investors are bracing for Tesla's earnings call, with analysts expecting a significant revenue drop due to intensifying competition, a lack of new models, and strong consumer backlash against CEO Elon Musk. Alphabet saw declines, with Google's parent company also scheduled to release its earnings results after the market close. The S&P 500 rose 49.29 points, or 0.78%, closing at 6,358.91, while the Nasdaq Composite gained 127.33 points, or 0.61%, to 20,202.002. The Dow Jones Industrial Average climbed 507.85 points, or 1.14%, to 45,010.29. On the economic front, U.S. existing home sales fell more than expected in June amid tariff uncertainties. Following a series of mixed economic data last week, traders have ruled out the possibility of the Federal Reserve cutting interest rates next week. According to CME's FedWatch tool, the likelihood of a rate cut in September stands at approximately 58%.
I think in particular, it really is kind of a stepping stone for what we're going to see in Europe. I think the EU is probably next on the agenda. Again, it's not going to be anywhere near as complicated as the Chinese tariffs, but I think that's the president's goal, is to get some wins under his belt, go to Japan, go to the EU, get some of those, and ultimately push the most difficult tariff negotiations with China off a little bit. A lot of institutions are kind of positioned not really aggressively in this market. When you look at the futures markets, the S&P is not, the options market's not grossly overweighted. So I think you've got some people that are expecting some volatility, and some of these announcements that come out are positives, and people are not in a great position, so they have to keep buying them. So yeah, I would expect as we get more and more of these deals, the market to continue to go higher. At some point, you think it's fully priced in, but days like today show you it's not.
On the same day, European stocks rose over 1%, led by automotive shares, after U.S. President Donald Trump sparked hopes for a trade agreement with the European Union following the deal with Japan. The Pan-European STOXX 600 index climbed 1.1% to 550.14 points as of 0809 GMT, rebounding after 3 consecutive sessions of declines. Other regional indices also advanced, with France's CAC 40 leading the gains, up 1.3%. European automotive stocks spearheaded the broad rally, surging 3.6%, in line with the growth of their Asian counterparts.
Very little is known so far. Of course, it is basically positive if a negotiated solution has been agreed, but it depends very much on the details. And of course, 15% tariffs will still remain. This means, on the one hand, that the inflation rate in the USA will tend to rise, and on the other, that there will be disadvantages for the export sector in Japan that were not there before. In this respect, we will have to wait and see how great the impact will be. More was expected in terms of tariffs. In principle, Europe is now trying to use this as a bit of a blueprint, so the hope that a deal will be reached between the USA and the EU has risen again. Nonetheless, it is a burden, and hopes can evaporate very quickly. It is not yet clear to what extent the EU and the USA will be able to reach a deal. We are very skeptical. On the one hand, the EU has made it clear in recent days that it is quite prepared to take countermeasures if a deal is not agreed. On the other hand, we have the USA, which has also made it very clear that it wants high tariffs and wants to enforce them. So far, little is known which can suggest that an agreement can really be reached. That may still work in the home straight. I have my doubts.
The U.S.-Japan agreement clearly benefits both sides, but in a balanced and selective manner. Japan gains significantly in automotive exports and investments, while the U.S. expands agricultural exports and attracts strategic investments, avoiding prolonged tariff conflicts. This is a crucial strategic step, though many challenges and opportunities remain to be addressed in the future. As of now, the US has signed framework agreements with UK, Vietnam, and Indonesia, while pausing tit-for-tat trade retaliations with China. Countries yet to reach agreements are closely monitoring developments from the Japan deal ahead of the August 1st deadline.